Good morning, friends. In previous class, we were discussing about performance incentives and different forms of incentives. In last class, we started this topic with different contents. The first one was the definition of incentives that we have already covered. But before starting the second part of this chapter, we are just going to cover the brief introduction that we have discussed in previous classes. Like the first one, the definition of incentives. Incentives mean something which encourage a person to do something or the extra financial rewards. Thereafter, we discussed why incentives are important because it is a vice versa concept. Management encourages the employees to do something extra for the organization so that they could achieve their targets. Similarly, employee believes if they will work hard, they will earn more remuneration from the organization. Thereafter, we discussed what makes an incentive effective. Thereafter, we discussed basic forms of incentives. The first one was bonus which is paid out of the profit after the closing of existing financial period. Then there was merit pay. Merit pay means a lump sum program under which the employee receive after the closing of one financial year. It includes the base pay plus the extra amount that the employee spent extra effort in the organization. Thereafter, we discussed commission for salespeople. Under this category, there were three types. The first one was 100% commission. The best example of 100% commission is insurance agent. See, they are working for the organization, but they are not taking the base salary from the organization. They are off roles person. Whatever the target they will achieve, on the basis of their target, they'll get the commission from the organization. The product will be of the company, but they'll get the commission on selling in the market. Second was base salary plus commission. Under this, the employee will get the base salary plus the commission from the organization. The best category of this is the people they are working in the insurance industry and the banking industry. Okay, that they are earning base salary plus commission. Revenue commission, again one of the very important type of commission where the employee will get the base salary from the employees plus whatever the revenue the organization will earn out of them, they will get proportionate percentage of share as a commission. Now we are going to start our today's topic, that is classification of incentive plans. So this is the chart of incentive plans. As such, there are three types of incentive plans. The first one is individual, second one is organization wide, third one is group. Under the individual, there are two types. The first one is time based, second one is output based. Second one is organization based. Under this, there are three categories. The first one is profit sharing, second one is gain sharing, and third one is ESOPs. And the third category is group based. Under this category, there is one subpart that is time based. Now we are going to start the first category of the classification of incentive plan, that is time based. Now the time based incentive plan, As per the definition of time-based incentive plan, employees, they are paid according to the predetermined rate, whatever the time they spent in the organization as per the laws of India, such as Payment of Wages Act, Minimum Wages Act. Each and every employee has to spend at least 8 hours in the organization, and on this time basis, generally the payment is made to the employees. See, there are different modes on which employer pay the monthly or time based incentive plan to the employees. The first one is hourly basis, second one is daily basis, third one is weekly basis, fourth one is fortnightly basis, and last category is it could be the monthly basis. Time basis incentive plans are divided into four categories: Hasley plan, Rowan plan, Emerson plan, and Bedux plan. See, these are the plans that helps the employees in calculating the various incentives for the employees. See, in our syllabus, basically we are not going to for calculation part, we need to understand just the concept of time based plan. Time based means as per the time the employee that he's spending in the organization, he'll get the incentive from the management. Second one is output based. See, output based is another plan through which the employee receives incentives from the organization. The basis of output is the quantity he produced in the organization. As per their quantity, he receives compensation or incentive from the organization. Say for example, if the daily target of employee is to produce 20 units and thereafter he'll get 100 rupees as per unit or per quantity. Price is 5, not price, it is cost for producing for on human resources 5, then he'll get rupees 100. But in case he produces 10 more products on a day, definitely firstly he will receive the base price, thereafter he'll be eligible to get the incentives on the basis of output based. Now the next category, organization wide. See, when we were discussing the chart, the second category was organization wide. Under this category, the first subpart is profit sharing. See, it is one of the important method through which we can distribute the incentive to our employees. See, in this category, the base salary of the employee is fixed. Under this, profit sharing is an arrangement by which employees receive an addition to wages. A share is fixed in advance in profit of the enterprise. It is an agreement between employer and employee. See, it is a sort of agreement whereby a fixed salary of employee is made. Thereafter, an agreement is made between employer and employee that the employer will pay certain percentage out of the profit to the employees. See, this type of profit sharing methods promotes motivation among the employees, because when they are working for the organization, they'll concern with more profit in the organization, because if the organization earns more profit, definitely they'll be eligible for the higher proportionate of return as their profit sharing. Now the second category under the organization wide too is gain sharing. Again, This method aims at increasing productivity and decreasing labor cost and sharing the result gain with the employees. See, again, it is one of the important method whereby the focus of every organization is to increase the productivity of the organization and decrease the labor cost, and whatever the result that comes out of these practices, the proportionate of the same will be distributed among the employees. It is based on certain mathematical formula which compares a standard performance with actual performance during given period. See, again I'm saying कि there are some calculation which involved in this gain sharing formula, but we need not to go for a calculation part. We need to just understand the gain sharing. The actual concept behind the gain sharing is we need to increase the productivity of the organization. We need to decrease the labor cost so that whatever the amount we can save, and out of that saving amount we can share the proportionate profit among the employees. That will be considered as the gain sharing. Now the third category, ESOPs, employee stock option plans. When we were discussing the third unit of our syllabus, there was one chapter that was equity based compensation plans. Under this plan, we have already discussed different types of equity based plans through which we can retain our top employees. This is similar to the ESOPs, whereby eligible employees are allotted company share below the market price, but there is certain condition that the employee cannot redeem this option in current position. Here some stipulations are enforced with the ESOPs, that organization allots certain share on an existing price to the employees, but he cannot redeem. He can redeem after 3 to 5 years, so that the organization can retain him for a longer period. The basic purpose of ESOPs is we need to retain the top level employees in our organization, and for top level employees we cannot give them perks in a large quantity. We need to give something extra so that they could retain in our organization. So the eligibility criteria includes the length of the services and their contribution and the capability of the employees. These are the various criteria through which generally organization consider at the time of giving ESOPs to the employees. Next category is group based incentive plans. Group based incentive plans means now instead of giving individual incentive, we are considering the team member as a group, and we provide equal incentive according to their performance. See, under the group plans, group based or team based incentive plans rewards all team members equally based on overall performance of the team member. Under the group based incentive plan, individual output cannot be measured. We need to measure the group performance. This group performance is based upon the group targets. So team performance is evaluated on the basis of time taken rather than the output produced. See, when we were discussing the individual plan, there were two methods. The first one was individual, second one was output. In case of group, we cannot measure the performance on the basis of output. We measure generally the performance of group on the basis of time. If team complete their target in well advance to standard time, the team member are eligible for the incentives. See, the payment to team members may be made in the form of cash bonus or in the form of non-cash rewards such as pleasure trip, times off, or luxury items. Team-based incentive foster cohesiveness among team members. So this was the about performance incentives. Anything, if you would like to ask me, please mail me on my email ID, or you can directly call me on my personal number. Your query will be solved as soon as possible. Thank you very much.